Good evening, good evening. A big warm welcome. So first of all, my name is Adam. I'm one of the traders and analysts with Trade with Precision. So a big warm welcome to all of you. Thank you very much for joining me. And yes, the topic for this evening, hi Diana, hi. The topic for this evening is hunting season, finding opportunities within the commodities markets. So I should add that I would love for this to be as interactive as possible. So if you have any questions as you go, please don't be shy. Please just ask me if there's something you want me to have a look at, or you want my feedback on certain things, or you have any questions at all, please just feel free to ask those as we go. So I am based in the City of London, just to give you some background behind who I am. I am a momentum trader, which really just means that I'm looking for markets with really strong momentum. So for example, that would be, we'll have a look at oil, I think is a great example. That's actually a trade that I just took yesterday. And if you were in, I think last week, any of the webinars, we were talking about that breakout that's been building up. So I just banked some profit on that, which is really cool. And yeah, what else? Trend-based trader, focusing on any markets and any timeframes that move. I've been doing a lot more day trading recently, and as you become more of a master trader, the direction is pretty much kind of a given. It's a question of where you get in and where you put your stop loss. That's really what happens as you get more and more experienced. You will generally have your, you'll try and look for a better entry and a tighter stop loss to maximize your potential profit on it. Thoughts on the agenda today? We're going to talk about recent movements in the commodities markets, strong support and resistance levels to keep an eye out on, how to go about sort of building a watch list to keep an eye on, and potential price movements of the markets. So, for me, we'll go across to the platform. I want to talk just for a moment about, it is possible on the weekend. So one of the things that I can do, or one of the things that I do that's part of my weekly analysis is on the weekends. I spend quite a bit of time kind of going through the markets looking for what's trending. And so here's the thing, you might not think that if you're intending to trade the 15 minutes or the 1 hour time frame, that it's worth your while to look at the weekly or the monthly charts, but it really is. Just excuse me 1 second, I've got to open the door, it's very hot in here. Can't seem to find a sweet spot. It's very cold, it's summer. I've got the office door closed and I'm boiling, and then I open it up and then it's freezing cold. It's just really odd. So the first thing that I'll tend to do on the weekends is look for markets that are moving. And really the idea here is to determine if, and this is kind of looking at price action from this perspective. So the best, I'm just going to color my pen here, the best sort of trading opportunities will occur. So let's just say hypothetically that we're looking at trading on the 15 minute or 1 hour. So we're looking at day trading. Now, if you want me to talk about trading the daily as well, we can, but the principles are really the same. So if I'm looking to trade the lower time frame, what I'm looking for is either a series of higher time frames. So let's just say this is the daily or the 4 hourly. I'm looking for a series of bars that are progressing like that. So this is something very similar here. As soon as I see that, as soon as I've got about 4 to 6 candles that are principally kind of marching like soldiers, then I know that if I go down to the lower time frames, I'm going to find a really nice trend. So that's nice. It's sort of a time saver to be able to do that. So again, if you have a trend on the higher time frame, you should have a trend on the lower time frame. The thing that's most dangerous is to look for periods when the market is not trending on the higher time frame and then weigh up whether it's worthwhile taking a trade on the lower time frame. So if you're a beginner trader, you might not be aware of this, but the higher time frames tend to dictate where the market's going to go. So we always want to have one eye on what's going on in the higher time frame before we take a trade on the lower time frame. So this also is a very kind of nice little bullish breakout pattern. We've got a series of higher lows going into this. We've got the 50, 20, and 10 moving averages all in the correct order. And what actually happens is that why the moving averages are so special is that because they are the average of the closing price, what they reveal is that even if the price action is doing this, the moving averages tell you where the market is ultimately closing. Is it closing higher? And if it is closing higher, that gives you a clue as to which way it's likely to go. So what we had in this situation was the 50 red, the 20 blue, and the 10 black all ultimately converged up to this level. So when they start to approach this level, price will usually break through at that point. So that tells you that the medium, shorter term averages of price are closing higher. It gives you sort of a bit of background confirmation, a little bit more confidence as to what the market's going to do. And then in addition to that, we have a series of higher lows going into this. So what does that mean? Well, from a price perspective, what it tells us is the buyers are very much in control. Okay, the buyers are able to push. They've got higher lows. They're pushing in. There aren't enough buyers above here yet, but the buyers are very much in control. And we can actually see that every time it's sort of the buyer comes back and pushes higher, we get a really nice bullish candle as well. So the buyers are very much in control. It's a question of when it's going to break out from that level. And you know, there's a point where it's just going to eventually work its way into a corner, but it's usually when price gets close to the moving averages into that corner that we'll usually within this, I would have said within this area, I would have said for sure we were going to get a breakout. And was there a way in which I could have been confident? And we're going to have a look at other commodities as well, but is there still an opportunity here? Yes, there is. However, what I would say is we have now hit our first target. The market has, and this is a big thing. It's really important to distinguish the difference between investing and trading. What we are talking about here, ladies and gents, is trading. We are talking about the fact that the market ebbs and flows, and we're looking to capture moves, bank the money, and then move on and find new trades. And actually, one of the healthiest things you can do as a day trader is start each day fresh. Start each day to almost as though all the trades, whatever happened yesterday, didn't happen. It doesn't matter. It sort of does matter as you build up experience, but the problem, there's a problem that happens when we try to go, well, you know, yesterday I made a lot of money on gold, so therefore today I want to see if I can make more money on gold. And it doesn't really work that way. We have to accept that the market will trend for a period and then maybe pull back a bit or trend for a period. So what we've got here is a very normal reaction. There's clearly a level here. The market reacted against that. There was a breakout opportunity from this flat level. So we were talking about this in previous webinars. I just want to sort of follow up on that. And again, what are the opportunities? There are still opportunities here. There is still very much, because here's the beauty of a caged animal. The longer a market has been caged, the more likely it is to do a move up. So for me, I think the probabilities of a move up to here are very high. Very high. So really the question now is we need to get past this level, but I think that's where the market wants to keep going. And so I'm looking for entry opportunities, which could be amongst the following. Price could come back to test this level, could, and then go straight back up. Or, you know, something like this and bump, and then you could get a little bit of a breakout thing, a similar pattern here you could get against this level. So multiple things, but I do think that the longer term objective of this market is to move to the upside. Alternatively, and this can be a little bit frustrating, if I go and change my time frame, so I go down to the 4 hour, price is just going to pull back into this area, or potentially to a Fibonacci level, or to a Fibonacci level, or to a previous level support. So in other words, it doesn't necessarily have to come back here. So the way in which a market can move is it can hit a level, pull back, kind of break through, come back and tap that level from the other side. So I like to call it a break and a retest. Or it can carry on and then pull back and not come back and touch it, or it can just keep going and then it can consolidate and then it can carry on. So these are kind of variations of the same idea. And so we have to accept that sometimes the market will behave. We've got one or two different ways in which it can unfold. What I'm looking for now, which is going to be a clue for me, is a bullish, a nice little green candle on the 4 hourly. If it comes back to here, that's fine, because it could come back as far as this. It shouldn't go much further back than that because it's a strong trend. If it comes back past here, something has gone wrong. Something has gone wrong because this is a strong trend. It should do a retracement anyway in this area, and I'm looking for a 4 hourly candle to be nice and bullish. I'm looking for a nice green, strong green candle. Actually, anything like this could be good, but what would be amazing would be something like a nice little bullish, like a hammer type of setup. So something with a nice tail underneath it, something like that, with a bit of a tail underneath it. Not really that. Something that closes near the highs would be great. Maybe even something like this a bit bigger. That would be great. If I can get that, that can be a potential move to the upside. So should price come all the way down here, so I get a red candle, and then I get a green candle here. This is very much a valid setup, ladies and gents. Let's understand something that, or let me make something clear, that I put my entry above the high of that candle, my stop loss below here. I like this because it has the additional protection that's of this support resistance level. I'm looking for that to go. And then I'm looking at least for it to go back up to here, if not back up to the bigger target. So one of the things we do is obviously we don't trust the market. being, trusting that the market is always going to behave is, it's kind of, I always think of those magicians in Vegas who had those tigers that they managed for years, decades before they eventually got mauled. But it's something that's going to happen. And so when we're trading with the markets, I don't trust the market. So therefore I'm going to put my entry here, I'm going to put my stop loss here. I'm going to accept that the next candle could trigger me in and stop me out, and then the market go this way, and that's fine. That was still a valid setup. And so this is something that newer traders struggle to understand. They go, well, if it was a losing trade, then it could have been a great setup. But actually, and that's what you don't know. You need experience that eventually tells you, no, that was a good trade setup. It was just a losing trade. There's nothing wrong with the trade idea. It was really good. All the best traders in the world would have taken it. There were no, it was valid in so many ways. So let me point out what makes this a very, if that happens, why that would be a good setup. First of all, please notice here that the MACD is trending higher. That is bullish. That's just the best way to look at it. Forget about oversold, overbought, histogram, moving average crossovers. It's trending higher means it's bullish. Okay, we've also got the RSI bullish. Now, there's no divergence or disagreement. You'll see here price goes up and price comes down. You'll see here price goes up, price comes down. The RSI is doing exactly what price is doing, and therefore it's happy with it. So when the moving averages are matching what price is doing, it's a good sign. When they start to do their own thing, then we have a problem. Right now, this is a nice strong trend. The breakout idea is very valid. We can't really see any reason why inflation isn't going to go away. The war with Russia isn't going to end anytime soon. It's fundamentally and technically logical and rational to believe that the price is going to continue to go higher, but we're not going to invest in oil. We are trading oil. So our goal is that should oil continue to trade all the way up to the highs here, that we would, if we could, take multiple trades. That could take, ladies and gents, that could take 2 or 3 days, and I might want to get a trade in every single day. So the idea isn't necessarily to try to milk it in one single trade. That's something that actually can hurt a lot of people, because the market could go up here, get up here. So I made a 3-to-1 or 2-to-1 on that trade, and then it comes back down again, and then it faffs around, then it ultimately goes up. And the person who's trying to milk it in one trade can ultimately lose when that happens. But a single trader who's looking for a single move and capturing profits as they go will do very well. So that is the first kind of thing I'm looking for. Alternatively, there could be a nice green candle that forms here, and this could all happen in the next 12 hours. All of this can happen sort of by 7 a.m. tomorrow morning. So that is definitely something I want to keep an eye on. This could, in fact, it's only 7 now. It could keep going up and finish 3 hours from now. There could be a bit strong bullish candles. So I just want to be aware of that. And so that is ultimately where I'm looking for price to go to, is the ultimate high. Then we'll see how price deals with it at that point. But that's what I'm looking for here as a trading opportunity. And that will hold itself with both Brent and as well with WTI. It's the same thing. And actually you can see WTI wanting to potentially come back down into these old lows here. So again, I'll go down to the 4-hour. And look for it. All right, so this trend structure is pretty good. It's not bad. Again, I think I would just rather that, let's pull this down here. We've already had price come back and test this. Now, it's amazing the little things that you learn as the years go by, because sometimes there'll be, I had a belief that and this was upended about 2 years ago, and it's really, or actually even maybe a year ago, last year, where it is valid for price to come back and retest the level here. So I always thought that once a price had retested, it should go away, and if it came back, that wasn't a good sign. But actually price coming back and testing the second time is equally valid. In fact, there can be an even better, the fact that it comes back, tests it, rejects it, comes back, tests it, rejects it a second time can actually add to the case for a better trade. So pullbacks into these areas. The trick is really trying to identify which area it's going to come back to. And you can't just settle on one. You need to accept that there could be a number. It should come back to these previous highs. It could also potentially come back down to, it is possible. Let's just try and mark these with slightly different levels. Let's make them like light blue, make them a little bit thicker. And then, yeah, try and mark them. So there could be something that comes down to about this level. That is possible. However, I think that it's, or alternatively, I just see a bullish green candle. So any of these, what I'm really looking for, what I'm looking to see is a nice bullish green candle. Again, you can see the MACD is nice and bullish. You can see the RSI is nice and bullish. That's fine. We don't need both of these. I think the MACD is sufficient, but we do try to, be comprehensive here. So we're putting 2 in as a double confirmation. So from a trading perspective, this is what we're looking to do. So what I did, if anyone's interested, was I was in on the US oil and I got in on the breakout of this flat level. Again, that's the same bullish pattern. So the same pattern that we see on a much higher time frame occurred on a smaller time frame. And I was able to get in on a break over here, just above that, with my stop loss was right nice and tight. And so I've already banked my 3-to-1 on that, which is pretty cool because I think I was triggered in on Monday or something, and I banked it now. So remember, my goal is only to do, I don't do 1% per trade. I do less than that. I'm doing 0.1, 0.2, 0.3, up to 0.5 because I've got large accounts, not just mine, client accounts, and then I've also got, and you know, I want to make sure that if I have 3 or 4 losing trades in a day, I'm only down by like 0.5% or 1% at most, rather than down by 5 or 6%. Psychologically, the 1 is much easier to come back from. And so anyway, so when I have what I would call a 3R, which just means I had 3R, which means I'm at 3 times my risk. Okay. And you know, in a case like that, it could be 1.5%. So if I bank 1.5% on that because I risked 0.5%, that's fine. 1.5% in a week is amazing. And you know what? Let's talk about that for a second. For me, 2 to 5% is what I would expect. I think 5 to 8% on average per month is phenomenal. If you're doing that, if you're hitting 6% a month, you're going to double your account in a year. So it's doable and it's amazing, but it goes through compounding. But if you're looking to kind of, okay, Adam, well, what should a beginner kind of trade for? If you're doing 2 to 5% a month, you are killing it. Okay, especially if you're trading for yourself, you're fine. And that, if you could just consistently do that, there'll be months where you might have a banger month. My best month this year so far was January, which was 22%. But my average other months have averaged between 3 and 6%. So this is what I'm looking for this to kind of continue and looking for that. And I'm going to have to keep an eye on the next candle because the next candle could be nice and green and it could be anywhere in this area. Now, if you want to throw in a Fibonacci retracement, that's perfectly acceptable. You can measure from the most recent low. So now I'm actually measuring higher time frames. And you'll see here that the 50 fib overlaps with this level here. So there's a cluster there. And the 382 overlaps there. So there's a cluster there as well. If we want to kind of see if there's any others, I'll come back to here. And again, we've got a 618 that overlaps with that other 50 or 382. So this level's strong. There's going to be a lot of levels there. When you have a strong uptrend, ladies and gentlemen, you have more buyers. It's logical. Okay, forget about conspiracy theories and all these crazy things. If a market is climbing, there have to be more buyers than sellers, right? There have to be. Maybe not even just more buyers, but buyers with more money. They just have to be. And you presume with people with more money, most of the time, they know what they're doing. Right? Sometimes you give people lots of money, don't know what they're doing, but for the most part, people with more money know what they're doing. And so the point is that when you have an uptrend, you have more buy orders in the system than sell orders because the buyers are in control. When that changes, so when the buy orders start evaporating and sellers come in, then this will also start to change as well. So there's nothing to sustain it. So the reason I bring that up is when price comes back to test these levels, I'm expecting there to be buy orders here because big institutions will place. They will look, sometimes they won't just add as price is going up. They'll wait for price to come back and see if they can get in again or see if they can add to their position. Okay, and so this is pretty standard fare. And so the good news when we look at Fibonacci or we look at pivot levels for on the much lower time frames, we can identify these areas where city traders are also placing their orders. Because if the technical stuff in the 80s was really big, 70s, 80s, and even a tail end of 90s, technical traders were ruling everything. And it's become a little bit more fundamental these days. That big institutions tend to be, some of them are getting rid of their trading floors. And I think that's just because somewhere along the line, maybe they didn't maintain the training properly. Where am I going with this? But the point is that the older guys with big money and older guys and girls with big money, institutions who own the hedge funds are using those levels to add. That's what they've trained their people to do. So all we are doing is piggybacking on what they do. Okay, so let's see what else is going on there. So for me, principally, and we can have a look at it as well, we can look at it on a monthly basis to get a sense of that. Is it overextended on a monthly basis? Yes, it is. Absolutely, at some point, oil's going to have to come back to the moving averages. You can see it looks good here, though. It looks fine there. There's no exhaustion there. We can see where the major historical levels are. So we could struggle. We could get another rejection at that one. I beg your pardon. We could get another rejection at that level. And just keeping an eye on this one on the weekly basis. I am curious to see where we close on Friday, but for now we could potentially continue up. And this looks fine. We've got the price coming up and coming down. We've got a lower high. We've got a lower high here. We've got a lower high there. The RSI looks almost exactly like price. So it's good. It's nice and healthy. The trend itself looks nice and healthy. So really, it's just about price being able to continue up. And if we look at last week's candle, ladies and gents, we closed near the highs. That's a nice continuation candle. It's really straightforward. You can sort of ask yourself, you can say, okay, well, kind of, does this candle signal weakness to me? No, it doesn't. It looks like it wants to keep going. And so you can start to depend on what the candles are telling you. You'll see that more often than not, they'll follow through on that. And there's my daily. And so my daily right now looks like a bit of a rejection. I can kind of see where it's coming from, but it looks like it just wants to come back for a couple of days, maybe finish up. So I'm curious to see, based off the 4 hour where we close tonight. I'm spending a bit of time on this because this is a real trading opportunity, and I want to spend a bit of time on this. If we close low for the day and the daily candle closes like this implies that if we break the low, we're likely to pull back right into these lows, if not further. So this is quite a strong rejection candle for a daily. However, should the daily close, we get another bullish 4 hour candle and we close up, should the daily candle close as anything other than this, either as a spinning top or as any kind of a green, then it's by 10 o'clock tonight, UK time, it's fair to say it's going to keep going up. What it's really doing right now in the 4 hour is just taking a bit of a breather. It's taking a bit of a breather. So I need to see what's going to happen. Is the next candle going to push all the way back up? We're going to have to see how that goes. Let's have a quick look at I'm going to look at the majors quickly. I want to see what's going on with the dollar. You can see here there's a bit of a boost recently on the dollar. Let's see it on GBP. Also boost there. So we've got a weaker dollar. Let's see if gold's doing anything. No, gold's not offering us any clues at the moment, and we're going to just get rid of that. Okay, so let's go through and have a look at what we got going on here. So we've looked at crude oil and Brent. We've got natural gas. So let's bring in natural gas. Let's look at this. Just so that we're being thorough, we can get a sense of that. And what I'm going to do here is just look at that on the daily. All right, this is a major level. This is something that has to be paid attention to. Okay, I'm annoyed by this default color, and every time I want to sort of change it, it seems to be determined to stay that way. Yeah. Okay, let's just do that. That is a major level. It's not just that we've connected again. You can see the failure both times in terms of daily. We had a day that failed, another day that failed, came back. And now the market has actually produced a bit of a lower high. It's coming back down. So this trend that was pretty much quite nice and strong. If we then change this template, so if I go switch up the template for this one, so I could see my indicators, you should see now that there's a bit of what we call divergence. So there's that bearish divergence. So we've got a line that goes up like that, but it's going down here, and it's doing that over here as well. So it's also hitting lower here. So what does that mean? It means, well, there's a very strong possibility at this point, at least, that the market's going to consolidate. I think it's sort of leveling out now, and again, it started to head lower, but now it's on to trend out a bit. It started to head lower, now it's trending up a bit. Now I know that sounds a bit wishy-washy, but I trust these indicators. These indicators imply that yes, the market was probably done with a big move, very overextended. If we go up to the monthly, we could see how overextended it is, and therefore it's due for a bit of a correction. Okay, so that's what we're seeing here. And you can see that weekly candle wanting to bring it back down into the moving averages. That's all it has to do. It just has to come back into the moving averages, and then it's kind of reached fair value and it could go back up again. So when we look at the daily, it implies, based on the fact that these are not continuing to go lower, because that's something that's a clue in itself. If this was still angling down like that, and this is still angling down, but it's not, it's below that, this implies that the market's exhausted, but it's probably going to go sideways for a bit. So I don't like this as a tradable opportunity. My expectation here is either that it's going to have a deeper correction down towards this level, or that it's going to go sideways for a bit. It's definitely tired and exhausted. You can see it here, it can't get through that level, and the indicators have started to trend lower. That is a sign of weakness in the trend. That these are almost effectively bearish, and they imply either a much deeper correction back down towards these lows here, or potentially just going sideways. So for me, natural gas is off the table as a tradable market right now for traders. Then let's go and have a look at metals. So what's going on with, this is palladium. Okay, so we've got palladium, silver against the dollar, silver against the euro, we've got gold against euro. Okay, when we look at the higher time frame, silver is really struggling to, sorry, why did I think it was platinum or palladium? I'm suddenly having a blank, I'm very embarrassed. But is it XPT palladium? It's got to be platinum. Yeah, it is. No, it's palladium. Okay. So this is because my brain was going, platinum should be more popular than palladium, but palladium is what kept coming to mind. That's where the confusion was coming from. And I've been trading since 6 this morning, so I apologize for that. So this is fine. It's stuck within a wedge. If you go back, I mean, we're going back quite a while here. Certainly on the daily, this is within a downtrend. You can see that the 50 and 20 wanted to go lower, but we've kind of gone into a bit of a sideways motion. And this is a great example, by the way, when you see this, of a market that is not tradable for day traders. When you see, remember how I said to you earlier that if you see days marching like this, it's good, or if you see days going like that, it's good on the lower time frames. But if you see this on the daily, you're done as a day trader on that chart. You can't, there's nothing there. Okay, so I'll prove it. We'll go down and have a look at this. Let's go down to the 4 hour, and then it's just a mess. And then we'll go down to the 1 hour. We'll just sort of zoom out. It's just a nightmare. This is just not worth trading. And it's actually stuck between this range anyway. So again, just going back to that daily right now, and even looking at where it is now, this is just not a money-making market. So how will I know when it becomes something worthwhile trading? Well, you can see in the past that it has had some amazing trends. But if I had to ask myself honestly, does it look like that now? No. Whether it's going to the upside or the downside, it doesn't. And so this is a problem. So what I need to see before I'm willing to engage in this market and put my hard-earned money into a setup is I need some sign from the market that it is trending. And so I need to see these types of conditions return. Ideally, I want to see it starting to trend higher. And the fact is, it just isn't that way now. So the beauty of this is I only really have to check this. I could check it on the weekend. I don't need, within 5 candles, is this going to produce a brand new trend within the next 3 or 4 candles? No, it's not going to produce it by the weekend. So it's not worth my time. And if that daily is trending, I'm golden. That's when my trades will have the highest probability of making money. So I really want to be cautious about picking something and engaging in it. And it's just not great. I need something where I need to see 4 or 5 daily candles starting to hit to the upside or to the downside. And then there could be some money-making opportunities on that, but not at the moment. So nothing on that. What else we got? So now we can have a look, for example, against silver against the euro. So when you get a situation like this, like for higher time frames, it's better. Honestly, I think it's better to trade these on the lower time frames. Going again, look at this. This is a perfect example of completely untradable conditions. If I switch this up and we go into the 1 hour, silver has been a nightmare. And to trade it because you think, well, gold's going up, silver will go up, or because of some fundamental bias that's been put in my head, it's not the way it works. You have to see the chart do what you think it should do. This is something where a lot of traders struggle. They try to reconcile to get the market to do what they think it should do in line with what they've heard in the news of the bias they formed. We don't do that. As traders, we're looking for something that effectively is about to trend or is already trending, and then we just piggyback on that. And if you do that, you're going to be so much happier as a trader because you're not really questioning, you're not trying to predict its move next. You're saying, look, if this thing is trending now, I only needed to trend a little bit further. So let me explain what trading is in real life. I go, okay, this thing looks really good, I notice that every time it kind of comes back to the moving averages, or I get a nice little flat level breakouts, those all look really good. And if it breaks out, I'm going to take that. I'm not really going to worry about whether it's to the upside or the downside, or whether it's silver or gold or euro, dollar, or anything. In these cases, I can find out later why it's trending, but I need to have those conditions. And so once it starts trending, I can be like, okay, I'm going to get in here, put my stop loss there, take some profit, and get out, and then take that trade. And so you get much happier if you just allow the chart to present you with opportunities. So a couple of things that I've told you that most people don't know is exactly that, is where you can spot a chart that's going to waste your time and take your money if you look at it on the daily, and you can just see those daily candles, you know, not where they're supposed to be. So it's just a waste of time. Let's get a sense of what's going on the higher time frame as well. If you get lost, you're like, I don't know what the hell is going on this chart. Go up the time frame. Imagine that you have a drone and you're lost in the woods. You don't know where you are. So you have a drone, you can send the drone up and you can look through your phone, you can see what the drone is seeing. And as the drone goes higher and higher, you get a sense of your surroundings. You can see the edge of the forest, maybe you see a river going down, maybe you see a nearby town or a coastline. So you get that perspective. So the same thing happens when we don't know what's going on in the markets. The monthly and the weekly, ladies and gentlemen, are your best friends. Even if you only trade the 5 minutes, they are your best friend. And so if you look here, surely, well, I can see this, but I want to check if you guys can as well. Surely you can see there's a little bit of a, there's kind of like a bit of a range thing happening here. It looks like it's still stuck within there. So that for me, when I look at this, I just do not see anything right now that is really worth my while. So on the whole, it's not great. Failing that, so maybe what a master trader would do, and again, this is someone with like 10 years of experience, might say, okay, I'm going to go to the 5 minutes, and the 5 minutes is trending now. So I know where my next major level is. So let's go to the daily. I'm just showing you how we would do this. There is, to my mind, definitely a level that I want to be cautious of. Let's call it there. Okay, so I want to be careful of when price goes down there. So we should be able to head down to those levels. We should be able to do that. We should. Okay, so let's go ahead and have a look at the 4 hour. How does the 4 hour look? It looks fine. It's just consolidated and just broken out. So actually there's some momentum, and look at how the MACD is starting to trend down, and look at the RSI trending down. That's great. Nice bearish momentum. The 4 hour, ladies and gentlemen, is your best friend for day trading as well. It gives you a really good sense of the direction. So let's go to the 1 hour. We could see now there is a bit of a trend 1 hour. It's very volatile. There was some news that must have come out. So I presume the news that's produced this also produced whatever the hell's going on here. So there's something else that's created a bit of US dollar news, you know. And so I'm expecting this to head down. It looks like it's got, and it looks like I've got some room to go down. So now what I'm going to do is go right down. I usually trade the 15 minutes, but for the purposes of this discussion, let's have a look at, let's go down to the 5 minutes. So the only thing, or even the 1 minute. So the only thing I want to be aware of is that there's a recent level here. We are a little bit overextended from the moving averages. I do think we have room to continue down to here. So I'm looking for price to either do one of the following things. It's a bit overextended now. What it might end up doing is going sideways for a bit and then breaking out. So that becomes a flat level breakout to the downside. Alternatively, I'm looking for it to break out and maybe come down and then come back up and retest this and then carry on down. So those are kind of ultimately my different ways of getting in. I prefer to get in once, not when the market is overextended like this, but once it's had a bit of a pullback into the moving averages. So in other words, I'm not getting in while it's already overextended. But where do I think the market is likely to continue to? I think the market is likely to continue down. Let's go and have a look at it on a 1 minute time frame as well. Okay, so immediately when I look at the data here, the 1 minute time frame immediately tells me this is not worth dating. I always compare getting into the markets as a relationship, so that's why I talk about dating. So I mean to say it's not worth my while engaging or trading, or as I usually say, as dating. This is not really liquid. It's not really trading much. It shouldn't be doing this. It should be nice, solid, healthy candles. If we go down to the let's go to the 1 minute on sterling so you can see that. And this is another reason why currencies are great. They're not all the be all and end all, not at all, but look at the difference. This is a 1 minute chart, and just look at the quality of the data here. So it is more liquid, it is more that way. Silver against euro is just not as popular market to trade. So the problem with this is the spreads are wider. You can see the spread here. The costs are going to be higher. Liquidity is not really there. It's just not worth my while. So I'm seeing so many reasons to pass on this, but I wanted to just talk about the concept of looking for a trade here to the downside. Okay, and possibly let's mix it up. Let's go and have a look at gold against euro, see if that's any better. Yeah, there we go. It's a similar move. It's already started to trend to the downside. And you can see we actually broke through this level. I think it's not unreasonable to think price could come back and test this after a while. But we've got everything kind of in our favor for the time being. We've got to move down. This would have been in hindsight, and I agree it's in hindsight, that would have been a great entry. You could arguably even have taken this one here. That's a little bit kind of that way, but now it's starting to head away from the moving averages, becoming a little bit thin on the ground. So we've looked at oil, we've looked at gold, we've looked at silver, we've looked at palladium. Palladium is absolutely the least attractive right now. In terms of that, we're now looking at it on the lower time frame. Silver is also very choppy and very messy. And very choppy and very messy, and in terms of day trading as well as end of day swing trading opportunities, it's not very attractive. Neither of those are, but oil is. Oil looks great. Is there anything else that you'd like me to have a look at? I know that my menu is limited here, and there's a reason why. Due to regulation, we haven't got the account. We're still waiting on getting the accounts. I'm not sure what the delay is. I'll chase it up again, but there's a delay for us, and then we'll have more instruments to have a look at. So I apologize, but yeah, I'm limited for the moment to this account. We're waiting for a live account. That's what I'm waiting for. And so, yeah, so I have some concerns with this. I'm not really a fan of this. Let's just go back to again and go and have a look at just gold on its own. So let's do some analysis of gold. So let's get a big sense, the big picture. What's the biggest perspective on gold at the moment? All right, so we look at it on a monthly basis. We have broken these old highs. Okay, so let's call that 1800. We also tapped 1900. The round numbers are very significant. Okay, so you've got round numbers which we can call 1900. I'll do these as kind of levels. Pick them up a bit. We'll go down to 1800. Will be a significant level. We've also had obviously 2000. And very historically never hit that number before, so that's very significant. And we've also kind of tapped the 2100. No. So what can we work out from this? Well, first of all, we've had a strong rejection a second time. What does that mean? It means that the continuation through is going to take longer now. Okay, what is the most likely scenario in this case? The most likely scenario in this case, or is unlikely to be, oh, we're just going to go straight through now. It's unlikely to be that. It is more likely, and again, it could be one of those things where we have like a build-up. So we have another tap and another rejection, and then we build up. But it's unlikely, not impossible, but it's unlikely we will go past these highs this year. It's just not. You don't get a second rejection like that after another rejection like that if this level isn't strong. I can understand the one rejection, but a second rejection very quickly, very shortly after, and how far back it's knocked it is not a sign of strength in gold. And again, you know, I always used to think, you know, well, there was this urban myth that, you know, if the dollar's strong, the stock market does this, and safe haven gold and safe haven dollar yen and blah, blah, blah. And actually what I discovered recently as well is that amongst the many things that big institutions keep on their books is gold. And the reason they do this is it's a hedging product. That's fine. It's a hedging instrument. But here's the thing. When they have to offload stuff off their, like reduce weight on their portfolios, they get rid of gold. So, and they'll often do that when, you know, in certain situations where you would think they're taking strain and they would want gold, and actually no, they're pretty happy to carry the risk in other parts now and offload the gold. And so suddenly you'll see gold dropping when you would think it would be climbing, and I'm just trying to explain why. Because they'll sell gold to protect the other positions, because they know gold's not going to go anywhere, so they're not going to lose anything, and it's not traveling very much. And so here's the thing. We had a nice rejection off these lows. We got onto the weekly. We had a bit of a rejection off these lows now. We're struggling a bit. Gold looks like it might want to come back down to these levels. It could very well want to do that. We'll see. Alternatively, it's not trending really well. We've got a downtrend currently within a range. So this is the best way to understand it, is that if we call this the top of that range and we kind of bottle this as the bottom of the range, you could even do that if you want. There's usually a central line that goes right through the middle of a range, and I think it's fair to say that's the one. So the market will stay above this or below this, but once it gets above it, it will tend to work way back up to here or back up to here. But these are the multiple levels, and that's very much where we are. All right, the much longer term picture of this on that monthly basis is generally to the upside. If we look at that 50 moving average, it's generally doing it here. That's fine. Here we've got an equal high, but we've got a lower high on both of these. That means consolidation. So even though it did consolidate here after a big move up, took a bit of a breather, it's not ready to carry on yet. So I'll be the first person to point out if we start coming pushing back up to these levels that we're likely to continue on. But I expect we might only be halfway through this, which means if this is the case and we got in here 2020, we're not going to be out till 23, give or take, at that point. Certainly not to 2023. I think that's a fair assessment. One of the other ways in which we could do it, and I don't usually use trend lines, but we could do it this way. We could say, okay, look, if it stays principally above those levels, then it's probably going to break out somewhere here if it's going to do that. If it breaks down, and certainly if it breaks these lows, then we're in a whole new ball game, because then gold is not, then it's longer term prospects, because then it's going to come back down like it did here. And by the way, I was around when this happened. The speed at which this accelerated, because actually it used to do all these small little candles here. Nobody cared about gold really, except a few people who were trading, and then suddenly it became popular to trade, and it just accelerated like this. But at this period, just at the high, at that bubble, there were PDFs and books and people going nuts over it, like they do about Tesla and cryptos at the moment. They were like, oh, you better hoard it because the time is coming, and it was madness. It was end of the world stuff. And then it just came all the way down here, and it's stuck here for like 5 years. So end of the world stuff is generally to be disregarded. And it always sounds reasonable. It sounds like the most amazing, logical, rational, evidence-based thing, but it just very rarely comes to pass. And so I would follow the charts more than I would follow somebody else's PDFs. And they usually will give us clear explanations or clear ideas of where they want to go. So, okay, so what do we kind of, to sum up, what have we kind of worked out here? We've worked out that gold, longer term, it's range bound at the moment. If we go again and have a look at it on a daily basis, we don't really have a clear trend. We were in a bit of a downtrend, we pulled back up, we're sort of hovering here again. We might want to come back down to this level. We could double bottom off that, meaning we could reject it again like this, another candle here. And then if that happens, if you get a second rejection off this, you are then very likely, like it's amazing how simple it gets. No, I have to phrase this correctly. As you get more experience, ladies and gents, your acceptance / trust in the market signals increases. You start to realize that sometimes it's giving you really obvious signals. And the best way to do that is what I'm doing is to map out what a potential scenario would look like. And that if it does that, then I have an action plan, but also the market is confirming what I think. So here I'm going to talk about a scenario that could happen here. I'm looking for a second reaction like this. I want a nice green candle, nice rejection, either off the low here or just higher low, anything higher than that. And then and here's the kicker, if it breaks that high. So in any scenario where price gives me a nice rejection like this off this level, or a higher low, so in other words, it doesn't touch this level, but it gives me a similar signal, and then comes up and breaks that, to me is a clear sign that the next level it's going to, we're gonna have to see how it copes at that level, but it's gonna go up to there. And if it gets through there, it's gonna go up to there. So that's what I will be looking for. But based on the bigger picture, we know gold isn't really in a rush to go anywhere. It really isn't. It's unlikely to start trending anytime soon. It's stuck within a much bigger range. So for me, the benefits here for traders is day trading, 15 minutes and 4 hour. What's going on? Is there a trend on the 4 hour right now? It looks like it wants to break down, and the next major level is down here. So that might mean that there might be some day trades this way. But again, it's safer for me to focus on one chart that has the clearest price action. For example, that would be oil right now. I don't necessarily want people trading one instrument, but I want you trading one that has the best price action, the calmest, most reliable setups. If you're confident trading this because you're like, no, that looks nice and bearish, I'm going to trade it, then that's fine. But this gets kind of tricky in this area. Whereas when you go and have a look at some of these others, you can see that overall the trend is a lot stronger. Are there any questions so far? Does this all make sense to you? Is this useful to you? Or is this boring you? Give me some feedback. And so again, I'm looking for a bullish candle here if this is going to continue. The higher time frame tells me on oil that it is going to continue. The only thing I'm waiting for is a turnaround where price is now or at this level. And if it comes down to this level and I get a green candle, I can use that as a trade. I can use that as a trade entry to the upside. If it falls through that level, I have a concern, because it shouldn't really do that. It's quite strong and healthy. And if it does something that, signals, I don't know if any of you have got pets, dogs or cats, but like if a dog doesn't eat and it loves its food normally, something's wrong. You've got to take it to the vet. Same way here. If this thing comes back and tests this level, that is acceptable. It's a breakout and a retest. And in fact, it's better for it to come back after a while. If it goes up and then comes back and tests it, it's usually going to go up and then fail and then come back again. But this broke out, it's coming back to retest it. So what indicators? So my primary thing is price levels and price action. So in terms of that, so I'm just thinking of all the different things. I like to, what are the most important things on a chart? I'm sorry, I don't mean to be going all over the place, but what are the most important things on a chart? It's candlesticks, it's price, and it's horizontal levels. Even if you are a fundamental analyst, you are still looking at price. Sorry, you're still looking at price. You're still going, okay, gold's at $1,800 or $1,900. I think it's a good price. It's going to buy in, and we subsequently see that. What's beautiful about candlesticks is we can see how the price reacts when it gets to that level. Does it have an allergic reaction? Is it bullish or bearish around that? And again, we expect to see bullish signals in an uptrend. What I do want to say though is that when a market is trending, its personality is different. So if you think of yourself, and I don't know if this happens to you, but you might be like me. If I'm stressed, my responses are different. The way that I think is different. My reactions are different. So if I'm under duress, which is the official term, if I'm stressed, I do not behave the same way. My partner, my girlfriend, my fiance will always say to me, what's up with you? What's going on? Or I'm stressed about certain things, and she can pick it up, right? So I'm erratic. My behavior might even change. The market is exactly the same. When the market is going through a sideways ranging part, it is erratic, and therefore its behavior is more unpredictable. But when it's trending, the market has a sense of where it wants to go. And so its behavior, it calms down, it becomes more rational. And most people don't know that. So in other words, a market is more predictable when it's trending. If it does something that it's not supposed to, that is a clue. So in other words, what you want to do as a trader is run yourself through scenarios. What should I expect this reasonably to do if it's going to continue up? And you'd be amazed, because I do it now as a habit. I'm talking you through it, but I've been doing it for so long now that I always predict roughly in my discussions. I have somewhere in there I predicted what the potential outcome is and what I'm going to do. If it comes back here, I'm going to trade it. I'll get a nice bullish candle there. The problem I have is that it's now nearly 8 o'clock at night and I want to go to bed. I don't really want to be placing an order for this, before I go to bed. I'd rather kind of deal with it in the morning. So what else can I do then? Well, we're on the 4 hour here. So I'm going to look to see on the lower time frames. If you are looking at this on the lower time frame and you're looking at that, this, you can see it's an uptrend here, it's kind of pulling back. But on the much lower time frame, that's an uptrend and that's a downtrend, and then it goes back into an uptrend. So I want to go see, we'll see if it's the 1 hour or the 30 minutes, but I'm looking to see a change in direction, downtrend on the 30 minutes back into an uptrend. So tomorrow, as soon as I get to my desk at 6 o'clock or 7 o'clock, I'm going to be looking for an uptrend because I suspect it's going to happen overnight. Okay, I might be wrong, but I'm prepared for it. So let's go down to the 15 minutes. Okay, so clear, we're heading lower on that. And you can see it's backing now. It's trying to find some support. It's trying to push back up. I find that interesting because remember, I was talking to you on the higher time frame. Would we get that bullish setup, that bullish candle in the next 4 hours? But here's what I'm looking for, ladies and gents. I want to see my 15 minutes. I want to see it. We could actually even maybe go a little bit further down. So we've got our 5 minutes. And here's what's going to happen. When it is going in the direction where it really wants to go, its behavior is going to clean up. It's going to become more orderly. Okay, these are things that you might not know now, but you will, now that I've told you, I hope that you will spot it. That means that if price action is orderly, it's going where it wants to go, whether you like it or not, whether you're like, oh, I want gold to go up and it's going down. But if that trend is strong, it's if the behavior is orderly, then that's where it wants to go. And so if we kind of bring this in, I'm looking for this behavior. I'm describing to you precisely what I want to see on the 15-minute tomorrow. And it could happen very early because it's actually trying to turn around here. Look, we've got double bottom, boom, boom. It's got a high low there as well. It's trying to break it. It's trying to go up now. Doesn't mean it will succeed, but it is trying to go up now. And if it does, what color bar do you think I'll get on the 4-hour time frame? Because I've said to you that I will either get a 4-hour bar where it is now, that would be bullish in the next before 10 o'clock, or alternatively, it'll come down here. The problem with it coming down here is that the daily then becomes a very bearish candle. The daily then becomes a very bearish candle, and that implies that it's going to fail and carry on going. If the market, it's interesting because you've got to pay attention to what the market is communicating on multiple time frames. if the market comes down here, it's going to be a bearish signal for traders, and they're going to push it lower. It's going to come back down here. But if this candle, and I said to you, if this candle tonight closes as an indecision or as a slightly green candle like this, any bit of green on it, it's going to carry on tomorrow. In order for that to be the case, between now and 10 o'clock tonight, I need to see, this is a 50-minute chart, I need to see this head up. So let's get some actual price, and you can see, look, it's desperately trying to turn around. This is very cool. If we go to the daily, so I can get a sense of where I need price to be at a minimum. So if I want price to close as, if I want price to close, let's say here. That's it. That's what I want it to do. I need to get at least there or higher. So let's go see where that is. If we go down to that 15-minute time frame, that is not far at all. That's all it has to do in the next 2 hours is just get back up there and higher. Anything above that would be a nice green daily candle. So I find that quite interesting if that is going to be the case. And if that's going to be the case, then tomorrow I expect this to continue higher. And remember, I've got all the room. I'm looking for trades up to that. So for me, the Brent and crude, and you could trade both. Sometimes you'll get a better entry on one than the other. Sometimes you'll get a breakout pattern on one that looks better. And I trade both, just in the same way that my mentor, my ultimate trader, Nick, who founded Trade with Precision by coincidence, he would trade the US Open, the NASDAQ and the Dow and the S&P, trade them all. To some degree, there's some safety in that crowd behavior, but also, and you can reduce your risk. So if I'm worried about doubling up on my risk on both Brent and crude, which is basically US oil and UK oil, then I would, if I'm worried about that, then I would just reduce my risk, split it up if I'm concerned. But sometimes one will go 2 to 1 and the other will go 3 to 1. So that's why I always take both. I always do that. If I get similar setups, I'll take them all, I'll just divide my risk between them. Anyway, you can see it's really battling with this, and it's gonna be interesting to see how this ultimately fares. Go down to you see, this is where you can see the 1-minute stuff at work. We have an idea of what we think the daily is likely to do, and you can see it's battling here. Look at that, it's trying to produce that. That's trending higher, that's nice and bullish. And actually this is fascinating because why? Because look, we've got a flat level here, but we've definitely got a climbing thing. It's very bullish. Usually I'd say this is going to break out. This should break out. We'll see. Anyway, and if it breaks out, it's consolidating. It breaks out, it should work its way back up to there. So we'll see how that goes. It doesn't have to. What I've done is I've described a scenario that supports the idea that if the daily is, the trend overall, in my opinion, is healthy, and therefore it should produce a healthy daily close. It should. If it doesn't, something's wrong. And that's fine. I'll deal with it in the morning. I'm not in the market right now, but I'm looking for a trading opportunity. This is nice and bullish. Most of this generally would mean that the market is going to trend a little bit higher. So how would we usually, if I was going to trade this now, if this was early in the morning, I would place my entry order usually above the high of that, with my stop loss either below the consolidation or below here. And then I would target 3 to 1. So whatever that risk is, I'd look for 3 to 1, but you can see there's probably a level here. So I'd probably look to make some money there. And then if it gets up to this point, if it gives me another setup. So traders will always take a setup and then another setup, and then they're out. You bank money as you go. You don't get into the habit of trying to milk something for its worth. In life, that's really not a good idea. Patience is required, but also the acceptance that moves will not always go on indefinitely for the rest of our lives. So that's what I'm looking for. On the other hand, should it come back down to the bottom here and we get a bearish close on the daily, then I'll have to deal with it tomorrow. But to me, the longer term trend should still go to the upside. And so really what I'm looking for is where can I get my entries and where can I do this tomorrow? So I'm doing a trading plan for real trading tomorrow to show you this. The best one that I can see, gold is looking like it wants to trade down to here. So I might look for a trading opportunity there. I'm going to stay away from silver. I think silver is a lot more messy. And so oil to the upside and gold to the downside. Now what's interesting here is if crude oils tank, aggressively, and gold also tanks aggressively, that's interesting, because then we're getting something's going on. Then we've got a dollar doing something. So again, if I go back up to this one and go to the 4-hour on this, it's quite, there's definitely something going on. So if I don't know, if I'm trying to work out what's going on in the market, so maybe I've missed something, I go to Forex Live, especially if there was a big move in the market and I want to know what's going on. These guys are just really good at like, if you see a spike in the market, what the hell is that? They often will give you a clue about that. So, okay. As advised for positive month. No, there's nothing big here. And I'm just looking in the last few hours, that's all. But there's nothing here. Okay. So that's what I'm really looking for. And you can see here there's a level. So without a doubt, I need to be prepared for that as well. This is on cable. I need to get, but I think it's fair to say if we break out through that, we're going to continue up. The market is always about the path of least resistance. So gold looking a bit bearish at the moment. Certainly if it is a higher low and breaks up above here, then I'm bullish on the way up. That looks fantastic. And with regards to oil as well, it looks like it's now coming back down within that range. Let's go back to the 15 minutes. This is what I'm looking for it to do. Get out of here, break out of this, and work its way up to here by the end of day. I'm curious. I'm going to keep an eye on it. I'm going to see where it closes at bedtime. If it closes down, that's fine. I'll do it in the morning. But if it closes up, that's a really good sign for looking for trading opportunities tomorrow. And this is what I'm looking for, ladies and gents. I want to see some nice cyclical behavior. Looking for price to pull back to the moving averages. Nice little bullish candle like that. Put my entry above the high or my stop loss below the low, and then target a 3-to-1. I don't want big candles, because a big candle means that my 3-to-1s, the market has to go a really long way to get me to 3-to-1. But if it's a small candle, any of these kind of small candles, that's a great opportunity to get in and target 3-to-1. So there we go. That's already we're already on the end slide. And I think that's fair. I mean, we weren't talking about currencies tonight, but I'm happy for that to be the case. Oil so far is my best trade this week. There have been some market moves. The yen pairs crosses are moving like crazy to the upside. So there are some trending moves on the yen crosses and possibly some of the Swissy crosses to the upside. So yeah, there's some stuff there. There's definitely some opportunities. I lie. I mean, I made some money on the yen crosses today as well, but oil was something I was watching from last week because I just needed it to break out through that level. So there we go, ladies and gents. We've literally come to the top of the hour. I do hope you found this instructive and useful. I wanted to convey to you kind of the levels I'm looking at, how I reach a decision, what I need to see the market do, and how I'm gonna trade it. Also give you a sense of what I do if I see 2 or 3 of the similar positions. I want to trade them all. Then I do trade them all. I just reduce my risk across all of those. Yeah, absolute pleasure, Dan. I hope you found it instructive and useful. So, yes, I will. You know what I need to? I want to do some separate stuff on the YouTube stuff. But this, if you are you talking about a copy of this recording? Because you should get a copy of it. But if not, I will send you a copy. Okay, I'll send you the link for it as well. Yeah, I'll do that. Thank you very much. I'm going to let all of you lovely folks go. Please enjoy the rest of your evening, and I look forward to seeing you next week's webinar. So thank you. And I'm going to Tuscany and Rome for the next week, so I'll be doing a little bit of work and trading while I'm there, because it's not every day, and I do like to trade as well. So I'll be speaking to you guys next week from either Tuscany or Rome. And yep, enjoy the rest of your week and evening. Thank you.